Welcome to part 3 of managing your mortgage. Some options which may be available. Your lender or servicer may be able to offer one or more forms of hardship assistance to help you keep your home. Let's first look at refinancing. If you built up enough equity in your home, you may be able to refinance the loan with a lower, more affordable monthly payment. However, if you've damaged your credit score with missed mortgage payments, or if your home has lost its value due to the market downturn, or if interest rates have increased since you took your loan, you may not be eligible for this option. Now let's look at forbearance. This option allows you to pay less than your normal monthly mortgage payment, or sometimes nothing at all, for a short period of time. For this option, you'll typically have to show your lender that you will have the resources to catch up on your loan in the future. A repayment plan is typically used when you've missed payments due to temporary setbacks that are now resolved. Your lender allows you to catch up over time, usually over 6 to 12 months, by adding the appropriate percentages of your due amount to your regular payment. With a loan modification, your lender may make a change to one or more terms of your loan. For example, the interest rate, term, etc. In order to achieve a payment you can afford, your lender may add a portion of the past due amount to the remaining principal balance to bring your account current. A stipulation agreement is designed to bring your account current after a collection or foreclosure action or other lawsuits have begun. This agreement suspends the action and requires you to make your regular payment plus a portion of the last due amount each month. While these options may add to the total cost of your loan, you will still be able to stay in your home. And if you are unable to keep your home, other options may be available. Let's look at those. If keeping your home isn't an option, you may want to sell it. And if you plan to sell your home, your lender may agree to delay foreclosure proceedings until you complete the sale. Your lender may also agree to a short sale. This is where you sell your home for less than the amount you owe, and the lender may accept a small amount as a short payout and consider the loan repaid, or you may be required to sign a promissory note for the difference. If you find a qualified buyer for your home, you may be able to have that person assume the responsibility of your loan and take over the monthly payments. Deed in lieu of foreclosure is where you voluntarily turn over your property to the lender as a method of avoiding foreclosure and canceling your debt. This option may have tax implications. As we discussed earlier, remember that not all these options may be available. Unfortunately, during times of distress, we sometimes become vulnerable to people who make promises they can't deliver when it comes to saving our home. Let's look at various ways scammers may try to take advantage of those at risk of losing their home. Beware of scams. Unfortunately, during rough times, others may try to take advantage of your hardship. People will say they can help, but in reality, the only one that may be helping are themselves, such as the phantom helper. Be aware of fancy but empty titles such as distressed property consultants or foreclosure prevention specialists. For a fee, these scammers offer to help you save your home, but either disappear with your money or do very little or no work, such as making a few phone calls, which you could easily do yourself. Another situation involves being lured to transfer or sign over your deed to someone who promises to save your home and that they will be able to sell it back to you later. Finally, don't be tricked into watching your mortgage payments vanish. By paying your mortgage to someone other than your lender. Like the old saying, if it sounds too good to be true, it probably is. So let's review some other ways we can protect ourselves. Don't provide any information to anyone with whom you did not initiate the contact, and never sign any papers under duress. Never sign agreements you don't understand completely or those with blank lines or spaces. Don't sign over your deed to a third party or agree to any deal that lets you rent the property and buy it back later. Get it in writing, and when in doubt, call your mortgage company or an attorney. Let's recap. Understanding the benefits of homeownership. It is an investment, and it's a place to start a family tradition, a sense of stability and community. Knowing all the costs involved with homeownership, the mortgage and utilities, and remember, the bigger the property, the more you may spend in your mortgage payments and utilities. Also, know how to maintain and improve your home and property. It's important to set aside at least 1 to 3% for routine maintenance, and review your budget. Understand what to do if trouble happens. Call your lender, and how to protect yourself against scams. Successful home ownership, that's the goal. And in closing, over 2/3 of U.S. households are homeowners. The majority of all homeowners make their mortgage payments on time and never risk foreclosure. On average, the net worth of homeowners is substantially greater than that of renters. And homeowners can be a source of shelter and security for families and help create stability in communities. So, in wrapping up, homeownership can be both rewarding experience and a good path to creating wealth. And over the next 30 days, I encourage you to review the type of mortgage you may have and whether or not your payment can go up. Fine-tune your budget, finding ways to save for routine home maintenance and improvement projects. Talk with your lender or a trusted third-party counselor if you have any difficulty making your payments. And remember to visit yourmoneycounts.com, where they have tons of resources and tools that will be beneficial to you. This concludes Managing Your Mortgage workshop presentation. Thank you so much for joining us, and we look forward to hearing from you.